So one of the things that we believe our future buyers neglect to think about in waiting to buy a home, because we hear a lot of stories on people thinking that we're going to have a recession and that the market's going to crash, and nobody knows for sure. However, we think that one of the things our clients neglect to actually pay attention to is the cost of waiting. So say we had a client that was looking in the $400,000 range. Can you give them an example of what that would cost for them to wait buying now versus buying maybe in a year or so?
Absolutely, it's a lot. So when we're looking at a $400,000 purchase right now, interest rates are around 5.5%, and your mortgage payment on the principal and interest side would be about $2,270. If you wait for a year with the current appreciation rates and what we also predict that they will continue to be, that same house is going to be worth about $440,000, and that mortgage payment is going to be $2,620. So that's about a $350 difference in the two, and the only reason that you pay that extra $350 is because you waited.
Absolutely, and especially if that person is maybe in a rental right now. If they're in a rental right now and the landlord or the owner refis that house, they're going to be refining at the higher rate. They're going to increase their rent payment and so on and so forth. So either way, you're going to eat that cost by waiting, but you may as well buy now, gain that appreciation.
Yeah, especially if you're in a rental. There's no reason not to buy. If you're in your current house, is there a conversation we need to have? Absolutely. But more likely than not, we're going to tell you that the best thing for you is to go ahead and buy. But if you're in a rental, there is no question, get into a house, gain that appreciation. You just have to ask yourself, in your 9-to-5 job, in the next year, can you save $40,000?
Yeah.
Just in your, from your normal paychecks, can you save $40,000? If the answer is no, which if you're being honest with yourself, it's going to be no.
Absolutely.
You need to buy. That money is your money, and there's no reason not to.
And like you said, not only just save the money, but not spend it on something else. Because I love a phrase that you've used with us before, which is this is a forced savings account.
Absolutely.
You can't just dip in and grab that money at any point. Refinancing takes a minute, and you have to plan on that. So I love that mentality on it.
Absolutely. The forced savings account comes with every month you make a principal and interest payment on your mortgage. That principal amount goes in as your normal deposit, like your paycheck, and then the appreciation is the interest, which right now you're not getting interest from your bank account.
Right.
So if you're getting 4, 5, 6, 7, 10% appreciation, which we're seeing commonly in this area right now, that's awesome, right? You have a $400,000 kind of base amount in that account to start with, which you didn't have, and you're going to be gaining 10% appreciation on that same money.
Where else are you going to be able to do that?
Nowhere.
All right, I appreciate it.
Absolutely.
I thought of a question then while you were saying that. Okay. So one of the things that we run into with some of our buyers is that they have cash. They've sold a house elsewhere, or maybe they got an inheritance, or maybe they've been doing amazingly well and they have been saving, which I don't know anything about doing that, but some people are really good at that.
Same.
So what would you recommend that we say to buyers, or if we had got them on the phone to you, would say a 3-way call or whatnot, what would you say to them about maybe doing a loan versus using that $300,000, $400,000, $500,000 cash to buy the house?
Yeah, so I always recommend financing. It's not just because that's what I do for a living,
right?
There are a lot of benefits to it. First off, with a large sum of cash, we can set up the financing to hit that monthly payment exactly where you want it to be. So that's one major benefit. Additionally, interest and points that you pay in a mortgage, they're tax deductible. So right there is something that you can use first year and every year after that to lower your tax burden when Uncle Sam comes calling for that. So
Because he will.
Because he absolutely will. So any way you can use the current tax code to help put more money in your pocket, which a mortgage can help do that, it's absolutely a benefit to you.
Awesome. I appreciate that.